Well, Jeff, it has been an amazing 24 hours. So I have Jeff Lutz here to try to unpack things that people are not unpacking. Jeff, I'm going to guess that you might have seen some things that maybe I might have even missed. What did
Mhm.
you see that you think people are not paying enough attention to from the earnings or things that happened around the earnings before or after?
Yeah, Tesla doesn't. Great to be with you, Randy. Tesla doesn't do these every 90-day check-ins the way other companies do. Other companies, there's a huge buildup for this, and there's a tremendous amount of work to optimize for that 90th day. And Tesla, right now, just they're not wired in that mode. They're wired in a mode of creating businesses and moats that are difficult to compete with. So far, they've created an EV business that is more profitable on a unit basis and in a business basis than anybody we know in the world that builds EVs. The issue is during the COVID period, they were able to get those gross margins, up in the mid to high 20s, and now it's, those gross margins have come down, and I think it's 180 basis point miss. They didn't actually sit down and say, well, here's how you break down the 180 basis points. We're not overly concerned about it. Guess what? We've tripled production of Cybertrucks. We only doubled shipments. Well, what that means is we've built more of an unprofitable product, because we told you it's not going to be profitable until the end of the year. So we built more of an unprofitable product. You can do the math. You can put it on a number. It's a poker term. Put that issue on a hand and say, all right, what are they losing? $10,000 for Cybertruck, 15,000, and then multiply it by the number of trucks built, and you can see what that would do to gross margin. Um, the other thing is they told you that S3XY minus Cybertruck, they were able to take COGS down
Right.
and continue that COGS reductions program. Now, COGS and gross margin, there is an element here in terms of volumetric build quantity and utilization. So, what did Tesla do this quarter? Tesla made a decision that said, we had these supply disconnects in first quarter. We told you they were supply disconnects. And sure enough, we turned around and we were able to flush that inventory easily. Well, when they flushed that inventory, they took their build quantity down. Their build, their production output was lower. Tesla made a decision to optimize for inventory and cash, and not just to optimize, just to build for the sake of builds. If you look at General Motors, on the other hand, for every two EVs they built in the first half of this year, um, only one has been delivered
Yeah.
to customers, and the other have gone into inventory. So it would be the equivalent of Tesla building around 800,000 or so cars and only doing 400,000 deliveries total in the first half. That's what others have done. But you have to do second, third order analysis of the earnings data to get through some of that and understand the importance of that. So Tesla obviously wants to run a business with low network latency, which makes them efficient on cash. And so they made that decision. So to me, the gross margin piece of it is like, is this a deteriorating thing? Has it seen the bottom? And I think that opened a wound, because I think analysts thought that they had already gotten there.
Oh,
But again, I think the disconnect is pretty easily explainable by the lower production and then the increase in Cybertruck. Tesla's got to go in and solve those problems. And they said they are. They said the Cybertruck's going to get the profitability by the end of the year. And they said Q3 will have sequentially more production than Q2. And I believe they said more deliveries. In Q3 and Q4 are seasonally stronger. So that's what I saw what I saw that maybe others didn't see was just very simple, second order analysis of the of gross margin. They're getting more profitable on the 3 and the Y, and they built more of the number one selling. They got Cybertruck to the number one selling truck in the world, and by doing that, you're building more of an unprofitable product until they solve that problem. But unlike GM, Ford, and others, they have a path to profitability on these vehicles,
right.
and it's finite.
We saw Ford's numbers today where they um, did a 1.1 billion in sales and they had
Sales,
1.1 billion in losses.
yeah, yeah, it's near
99%.
100%.
Yeah. Yeah.
Yeah. Right.
That's
So yeah, those businesses are structurally impaired. And there's really with the vehicles that they're building and shipping in their portfolio, there is not a path to profitability. So those companies have put a lid on their production. They've kind of told you that they've done it, but they're doing it, they're actually in the background, it's even more severe. So like GM said, people misread the GM announcement from a few weeks ago of not what they said is we're not going to put a capacity for 1 million units. People thought they're not going to have sales of 1 million. They're not even putting in the build capacity for 1 million. Their sales may be much lower. They may put a much tighter lid on that until they can develop vehicles that they can build profitably below 40K that can drive volume.
oh,
So
yeah.
that's what one of the call outs is, the gross margin side.
So then Elon said there have been quite a few competing electric vehicles that have entered the market, and mostly they've not done well, but they have discounted their EVs quite substantially, which has made it a bit difficult for Tesla. We don't see this as a long-term issue, but really as fairly short-term. So how did you read that?
Yeah, I mean, he's basically saying, hey, look, he's trying to explain that, we have to, do competitive finance. We have to do a lot of things competitively with our vehicles because, there's this issue of 100+ day inventory with a legacy EV and them dumping product. And you've got companies like um, Fisker, dumping product for, $10,000 to $15,000 for EVs that should be sold for 40 to 50,000, and they're dumping them, just trying to basically liquidate inventory. But I don't think that that's the largest. I think that's happening, and I think Tesla's appropriate to call it out. But you're still at peak, interest rate environments. You've got used car loans at a 14.2% rate. I mean, that's astronomical. You've still got new car loans that are anywhere from 6 to 9%, depending on, where in the country and your credit and so forth. And, that's a problem for consumers. That's putting a lid on. And if you look at what GM did again, they were celebrating how many EVs they ship, but essentially they're building, and they call them sales into wholesale, which is they're selling into their dealer network. They're not selling out to consumers. So I think people get easily confused. They look at an 8% sales increase, but they don't look at the 40% increase in inventory.
Right.
I
Right.
mean, that's what's happening. And analysts have to do a better job of like breaking that down for people. And I think people that are investors need to do a better job of, seeking out that information and trying to understand it. But there were some really big things. I don't know if everybody caught on to it on the earnings call that I found very interesting. Um, uh, One was the commentary on well, first off, the to me the biggest thing was around licensing. We've gone from one potential partner in discussion to several.
Okay.
Um, and I think that's huge. And Elon talked about an annualized volume requirement, in the, high volume, like 1 million units or
Right.
more. So it tells you, it may narrow who you think that they're talking to.
Right.
Um, I think that could be BYD and Volkswagen, for example. But we'll find out.
Mm-hmm.
Um, but the fact that the number of people, the number of partners is increasing, I think is a big deal because now, like a hockey term, you have more shots on goal, you have more probability of potentially scoring a goal. And then that changes the business to kind of more of a sum of parts business. If it's not just the stuff that Tesla makes and builds and sells to consumers, now their businesses are their own businesses and could be actually larger than just serving Tesla themselves. Um, this comparison he did to Nvidia, and basically we saw a live negotiation with Nvidia on GPUs on his earnings call. I thought was pretty fascinating. I've been in the room, I've been a party to these things in the past, and the way that he's handling this is really good. It's really good for Tesla, and it's actually very fair to Nvidia. Last year, Elon said that Elon needed chips and he needed them quickly. And so he went out in public and said, there's a less than 10% chance that, Dojo ever makes it.
Oh,
And this is a huge long shot. And the message there was, put the phone down, NVIDIA, please help. I need as much as you can get. Now he gets his Memphis cluster filled. He's got all the chips he needs for Texas for now, and he needs a whole lot more. So what does he say on the call? He says, "Well, NVIDIA is a great partner still, and we need their help. However, the prices they can't stay this high, and we need more product." So he basically made it an appeal to NVIDIA, like we need to move up in line, we need more product, and we need some help on pricing. And if we don't get it, guess what? This thing we've been working on in the background that I thought was low probability, we actually think we have a chance to compete with NVIDIA in maybe a year. And that just, that changes everything. And now Tesla turns into, they did this. No, so this isn't like an idle threat.
No, I don't threat.
Tesla did this on the inference perception side in the vehicle. And there are now 7 million vehicles that could have had an NVIDIA socket in there that have a Tesla socket in there. And so this isn't an idle threat. And NVIDIA knows that Tesla has the leadership and it has the brain power, in the company. But there's a lot of work to do that. But I thought that was a fascinating discussion because it maintained the relationship with NVIDIA, it applied appropriate pressure, and it also let people know that this Dojo thing is now for real. And then you talked about energy and the new plant tripling output, which means, and like what they did in Shanghai on the auto side, going from 42 seconds to 30 seconds on the vehicle, which effectively, takes your output up 28%,
Right.
In the same capital framework. It looks like they're going to build a bigger, maybe more efficient megapack factory there. And my guess is if we check back into Lathrop, they probably have more than 40 gigawatt hours annualized capacity. So it looks like they're simplifying they could be adding capacity, but it looks like they're also simplifying and driving greater output on energy, and it's showing. And then, Optimus, the commentary is like,
Yeah,
we have a version 1.
before you move on though, we come back to the 30%, 28% increase in capacity at Shanghai? Do you think, because I've been asking everybody, and so I want to get your opinion too. Do you think that 30-second throughput is something that they can bring to Austin and bring to Berlin, maybe even bring to Fremont?
Probably not to Fremont, but I think what they're doing in Shanghai is getting Shanghai up to Austin level of automation. Because remember, there was an increase in automation, and then there was an improvement in output per square meter, and they changed the construction of the factory to kind of use more of the Z height of the factory, and versus it more being an XY area thing. So I think Austin and Berlin can. I think they have a breakthrough. That means they have a manufacturing process that can build a Y in 30 seconds, and there's no reason why that can't go to other factories of a similar type construction and format. So I think that would be Austin and Berlin. I'm not sure about Fremont being able to do that.
Okay.
And
So
if I'm Tesla, he's kind of sent a message, Randy, too, on, how much business they want to do in California, maybe. We'll see.
could be, yes. So, and then, okay, so Optimus.
So Optimus, the message, so I know what's happening here, and it's fine. It's beautiful. Sometimes as an OEM, you can make a decision to go into limited production on something because you have a partner. It could be an external partner, it could be yourself. Remember, Tesla, Elon has many different companies under him. And I think, and there is tremendous value in going into a controlled production rollout, because instead of just waiting and doing more and more revs in the lab, the mechanics of getting your whole supply base and getting your factory, getting your people, getting your software teams, hardware teams, getting them in the mode of saying, look, like, what's version 1 of Optimus? Like, we have to lock a version 1 of Optimus. I don't think they've done it yet, but I think they're going to do it really soon. Like you said, he wants to build it in the early part of 2025.
Right.
So that means that supply chain is being spun up. Those engineers are being spun up on the hardware software side, and they're going to converge on something to build a few thousand of these things. And then they're going to go put them in the field. They're going to literally have one of their Tesla departments put a purchase order, buy them, from the Optimus department, and now we're going to get that whole thing working of invoicing, payment, everything working, and then now you're going to get this precious field data, this precious in application data. And Elon made it very clear on the call that they have assets that other companies don't have, both in AI and in manufacturing, and they have them all under the same roof in one company. And there's inherent power in that. And what I think some of the other companies may be missing that Tesla will get is Tesla has tremendous expertise in designing a manufacturing station. Here's the manufacturing station. Here's how it gets load balanced into the line. Here's what it looks like at initial start. Here's how we get it to peak run rate. Here's how we reduce the floor space. Here's how we reduce the cycle time. Here's how we reduce the number of interactions. And here's how we get it to a higher rated speed. This is how you get a Model Y going from 43 to 30 seconds, this continuous evolution. So I think Tesla with their humanoid, they understand that it's not good enough to just get a photo op and get your humanoid into a BMW factory or into some Chinese factory. What you need is you need the ability to do the action, you need the accuracy, and you need the rate, and you need the actual yield and performance of it. And I think that no one's going to be better at going through those cycles with these couple of thousand robots, getting those learnings and building them into version 2 than Tesla. So I think they have a very unique opportunity.
What did you think about the idea of spending $5 billion on 20% of xAI?
Well, I think so. One way to look at it is it's a call option on Elon Musk, and where else? If you look at the ROI in the auto industry, for example, if you look at it in stationary energy, where right now could you get the greater returns from both of those is putting $1 into an Elon company. So if you say, well, if you say that's transferable to AI, I think the only dangerous thing with it is, first off, I think they should do it, in short.
Okay.
But
Okay.
there is inherent danger in investing in a startup. These things could go to zero. A high percentage of them do go to zero. The other thing is you've got things like, Meta with Llama 3.1. They have an open sourced model out there that has 405, billion. It's a massive parameter count. And so how do you compete with that?
Yeah.
I think, if I would love to see that investment thesis and how they do it. The synergy though with xAI and Tesla is xAI has a termination point with their technology that others may not have, meaning 7 million automobile robots moving through the world at some point will need the mind or brain of like, where do I go to get, a hot dog in the area I'm at? And you need some sort of mind or brain to start doing that thinking. Our cars are still, they're dumb. They're very smart when it comes to navigation AI and full self-driving. They're not smart when you get above the infotainment level. So with xAI and Tesla, they have a termination point. They have a termination point with the brain in the humanoid. And of course, they have it with ads and X. So if you're betting on xAI, they have those 3 termination points that are pretty high, return, high probability of success, and it's all under one roof. So you're not going to have this BS of, just people talking past each other or not figuring out. It's all under one roof. So there's a fairly high probability of success. And if you think xAI is inextricably linked to Tesla's success because you need that in the vehicle and you need that in the humanoid, then you would want to make sure that xAI is successful. And if you don't have an immediate need, for that 5 billion, then, there could be, I don't know if 5 billion is enough. That's like, so the one question I want to answer is, what's the current like profitability? I think there's got to be a huge burn rate on it right now.
Right.
And is 5 billion even, like, what would 5 billion actually do?
So I had a couple of other questions.
Yeah.
regarding that. So one of the things I put out this morning was, what about a stock swap instead of cash, or partial swap and partial cash?
Yeah. I think there could be advantages to that. I think, you know, so Tesla getting into Texas helps them have the kind of flexibility to do these things. And then, you know, Elon and Tesla know how to whip up the shareholder base now and get, and get consensus. And, so yeah, I mean, I think that there could be advantages to that option versus cash. But remember, this is the company I think that invested 3 or 4, I don't know, it was a billion or 2 billion, some on the order in Bitcoin.
Yeah,
And
yeah,
people
right,
were flying off the handle there.
right.
So anyway, the language model field is a highly competitive field. It's not clear on monetization yet. However, I think the unique relationship and connection with Tesla may be one of the more higher probability opportunities for success. That's why you see these open AIs. That's why you see them, like, everybody's trying to figure this out. And like, do I latch on to Apple? Who do I latch on to? Um, and I would say, Google's very far along, doesn't get enough credit. But they're very far along in terms of their training and how they use it, both in Waymo and other areas of their business. So they're quite far along.
So I think you and I might have talked about this last week, but I want to bring it up again. Where do you think Tesla is accounting for the pay down on the interest rates? How is that showing up? Is that showing up in in reducing the sell of the car to a
Yeah.
lower number? Okay, that's where it's coming up.
It
So
looks like they're taking it up front. More, it looks like they're taking it looks like Tesla's being very conservative with this. And it looks like they're taking a huge portion of it up front. And that's one of the big things that negatively impacted ASPs.
ASP,
When you talk to people, they would say, well, it's better that they're doing that versus affecting the residual value of the actual vehicle itself. So
right?
there's advantages of this, but this definitely weighed on vehicle ASPs.
Okay, so we had a $700 roughly drop, right, in ASPs from quarter to quarter. We know that there should have been maybe an increase in ASPs because of the Cybertruck. So maybe, because we got to figure that real cost of those reduction, or the buy downs, has to be closer to like 3,000. So potentially, do you think that whole 3,000 is in there, but it's being absorbed by the Cybertruck?
Yes, and front end loaded. I think Tesla was conservative
Okay,
uh, uh, with this, and then of course having 890 million in ZEV credits.
right,
Um,
right.
you know, I think they were conservative in their math here.
Good. I'm glad I finally got that straight now, because I've just been trying to figure out where they were going to put it. All right. Let's see. Let's turn to the economy. Rate cut in July. People are starting to say that there might be a rate cut next week. Former New York Fed President Bill Dudley, in fact, you pointed this out. I picked it up
Yeah.
in X account. Former New York Fed President Bill Dudley says he was a higher for longer hawk, but he just changed. He says, I changed my mind. Waiting until September unnecessarily increases the risk of a recession. I have been saying for at least, I don't know, 4 or 5 months now that I thought third quarter would be recessionary, that we might even see negative numbers in the revisions on second quarter. Where do you stand on all that?
It seems like every time they go in and do revisions on GDP, on jobs, they go in the negative direction for the economy. And I don't know if these departments can't count. I understand that there's going to be some error, but then they should commit to an error rate. I mean, you run factories, you run operations, and there's going to be error in anything that you do.
Yep.
But what you get the teams to do is you try to understand what the variation is. You try to get them to commit to an error rate and commit to improving it sequentially. This is the wild, wild west. So I don't know exactly what we're dealing with, but we know we have further deteriorating job. We have a further deteriorating job picture. We have 3.6% unemployment going to 4.1.
Right.
And so you have a 500, basis point jump there. And then, you've got, CPIs that have relatively cooled. You had a little bit of a hotter PPI number. But you got you always have some data artifacts happening, but in general, you've got inflation around 3%. The Fed wants to get it to 2%. And the question is, do you crater the economy before that, or is there going to be more of a glide path? So they said that they want to get ahead of it. I doubt they're going to move this month. What I'd prefer to see is if they're going to do it, then maybe do a quarter point this month. That would send a real message. People could also get freaked out by that, or just go in September and do a half point and get some real movement going, and then go do another half point, or in November based on how things look. But yeah, September moving to basically, I don't know, 94 to 100% probability. It looks like things are lining up, and you don't want to see things. You saw the bond market moving up today with the Nasdaq selling off 3%. I mean, it's the yield curve's trying to uninvert,
Yeah,
and
it's getting close. It's down to 15 basis points. Yeah.
and that's a sign of like, pointing towards a recession. But then you've got data points that point away from that too. So
PMI was not particularly impressive this morning, in particular on the guidance. They were saying that not optimistic going into the presidential election. A lot of fear and confusion about that. We've seen the VIX going up. It's not very high yet. It's only up around 16, 17, but that's a lot higher
that's the
than
move.
it was.
The relative move today was a lot.
Right, it was. So yeah, of course, again, I've figured that, well, part of the thing you may remember is that the third quarter last year was like 5.3 or something up on GDP. So it makes it very, very hard in the third quarter to get above that 5.3 from last year. So I think there's the year over year problem is really high. So that's why I've been calling a definite negative GDP for the third quarter. But the question becomes, so what I'm imagining is that the GDP number comes in tomorrow lighter than expected. So 1.9 is the expectation, but not horrible because it'll be revised downward later. But I
Is
think
this the Q2 actual you're talking about, or the
Q2
Q3
actual, the Q2 first
prediction?
print tomorrow. Yeah.
Yeah.
So I'm saying it comes in less than 1.9. Then we get an okay print on PCE because we pretty well know what PCE is going to do. It's heavily influenced by CPI and PPI. So, but then it all will come down to jobs. So I'm thinking maybe they don't cut next week, but if jobs come in at 4 point, if what I just said is true, and jobs come in at 4.2, then maybe they get an interim cut. They can cut.
Well, we're not going to get. What are we going to get on job? We're going to get an ADP number. You mean
a week from Friday?
Oh, you're talking about the full month of July. Gotcha.
Right. So after the Fed meeting, Fed meets on Wednesday, I think, Tuesday and Wednesday, and they make their decision on Wednesday. And so Friday, the jobs number come out. Let's say it comes out at 4.2. I could imagine an interim decision to cut a quarter.
Oh, you think they would come in after the July meeting and cut, even in the quiet period?
Right.
Wow. That would be, like I said, I think the markets would actually get spooked with that.
Yeah, they might, but it might be the Fed going, okay, because I don't think they're expecting the employment rate to go up to 4.2. I think they're looking at that as the no man's land.
Maybe more likely, Randy, what could happen is the Fed usually gets a preview of that number. So they get a preview Wednesday morning. I mean, this number is known at least 48 hours in advance, if not longer.
By the Fed. Okay.
They could go into that, at least that morning of that meeting. The Fed has the readout on Wednesday afternoon. If they get some horrible number on jobs, then yeah, then maybe they make a decision like, let's go.
Wow.
But again, I think a July cut spooks markets. So I'd much rather them talk up the September cut and maybe even talk about it being a half point. And I think the markets then would be like, okay, we're okay right now. And they're kind of setting us up in September. And I talked about this too in the kind of the framework of Tesla. Fine, not a great earnings print, but now you're into Q3. They said they're going to sequentially grow volumes. You have the backdrop of a Q3 rate cut. You have the backdrop of a Q4 rate cut. you have the backdrop of this presidential uncertainty. So maybe people are going to go in and try to get as many, of their, $7,500 credits as they
Right.
can get. The
Right.
other auto manufacturer said we're not increasing output. Tesla says they are, and they have the capacity. So I mean, who knows? We always think these stars are going to align, especially with the IRA, and it didn't really ever turn out to be anything. But I look at the backdrop of a rate sensitive stock and the Fed cutting, and that could be good for Tesla going forward in terms of some momentum. And then you have the 10-10 event, and then hopefully you've got sequentially higher. If Tesla, can get sequentially higher builds, which is, I think there's a no-brainer, they're going to be much
Right.
higher in production,
Right.
and they can do that on deliveries. They're going to do a number on gross margin and COGS. I think they're going to do. I think they'll do much better. I still think you're going to have the Cybertruck drag, but this quarter was mostly the most frustrating thing you can do in a supply chain is to tell your supply chain you got to burn through the inventory when they have all these event-driven ideas that take COGS down, and they can't get credit for it because they can't build and ship those things in the quarter because they're burning last quarter's inventory. So I know that they can probably do a lot better in Q3 and Q4.
Yeah, yeah. So I did, I'm sure everybody probably looking back wonders what the heck happened to the $7,500 IRA, why that didn't actually stimulate sales like crazy in the first and second quarter, even though, of course, we had it the prior year. But everybody was like, well, now that it's going to come right off the top, it'll be easier for people to figure out. I was wondering, though, whether what happened was the $7,500 was such a much better deal on a hybrid, and that sucked up a lot of potential BEV sales and caused Ford and General Motors to switch their thinking, actually, and some of the foreign makers too, to say, oh, well, might as well switch to hybrids because this is a way better thing for us.
They did. And the dealers know that they can get those hybrids in for oil changes. They can get the service plans. They can do all the classic things they can't do with an EV, so they're pushing them more.
Yeah.
So you kind of have, you kind of have both sides of this with the IRA credit propping up hybrids was not a great thing. But you know, Tesla, Tesla could, you think that Tesla would have done better under the IRA, especially the number of models they've introduced. But let's see, they just introduced rear-wheel drive
Right.
models that should do well. I think the Model 3 version they just introduced, I think that's a game changer. I think that's going to be a big deal.
The performance, of
Um,
course, is doing very well. So those are good. So what do you think happens if there's one thing that you can almost automatically predict is that after Tesla blows off after an earnings report, that typically they start about 2 days out, they start moving up again. But this one was more based on a miss. Do you think we'll still get that move upward later this week or early next week when people start realizing what really happened at that earnings call? Because it's certainly the sentiment was the what do you want to call it? The pundit sentiment certainly shifted, completely changed what they were talking about in the call, as well as afterwards. Will the street and the retail investors recognize how big this call was in terms of the future?
yeah, it's hard to say. I think there's a technical thing here now where there was a gap somewhere in the 205 to 211 range that may need to get touched. I don't know. I think we're getting close to that already, or we got close to that already um, today. So you may have a technical thing happening, and there could be just a lot of relative strength with the stock over 200. If it gets below 200, I think it becomes a real problem because now you're basically a couple months out, almost 3 months out from another major other major data points.
Right,
You
right,
got to
right.
get another P&D, you got the 10-10 event and so forth. Um, but I think there's a little bit more relative strength in the fact that the stock was able to close over that multi-year downtrend line. I think there's a little bit more relative strength, and I don't think it just goes back down. But I hate prognosticating, trying to predict daily or weekly movements on the stock. But yeah, 3-day rule. is in general, can be a good thing, but you never know. It could,
No,
could
no.
bounce tomorrow,
Yeah, I'm
could
not
have
trying
a
to give
bunch.
investment advice. It's just always
Yeah.
fun to kind of. I think it's more. We all have been doing it our whole lives. It might have been hockey for you. It was baseball for me, but maybe it was baseball for you too.
Yeah. Yeah. You're definitely looking at it. I mean, the markets today, I mean, they really took a lot off.
Oh yeah. Well,
Everybody.
that's another good question. That's another good question. Okay, so I predicted this 5% rollback, this 5% pullback in the market. Nobody else was predicting it. I said, look, it's just way out over its skis. I said we got to have at least a 5% pullback. Well, we had that last week. Now it looked like maybe that was over yesterday, and we were going to start going back up. And then all of a sudden, oh no, now we're back underneath again. Are we going to go to 10%? I think so.
Yeah. I mean, it's probable. It's hard to say, but I think we're over 7. Like on the NASDAQ, I was just looking at today, it was 7 and change
I mean,
today from its peak, from its recent peak.
right.
So yeah, getting the 10% isn't a huge stretch from here. A couple more, or even one more bad session like this, but even a couple more and you're there.
Yeah.
But it's hard to say.
And the
Sometimes these
Dow,
things stop at 5, they stop at 7 or 8, or they stop at 10, or they go to 15 or 20.
right, right.
Um, but you have next week is you have kind of the, more the darlings of mega cap tech. You've got, Amazon, Meta. I don't know if Apple's reporting next week or not. But you've got some big reports coming in. And of course, then you've got Nvidia a couple weeks later. You got AMD next week. So you've got some, those alone could really change the
Impact.
direction of the market.
Yeah, sure, sure, sure. All right. Well, Jeff, as usual, I want to get you out of here on time, and then I'll take over and we'll take a look at where the markets are with just me alone.
Yeah, great to be with you, Randy. You're the best to do that. So great to be with you.
All right. Thanks again for being here.
My pleasure. Have a good
All
evening.
right. So where we are in the markets, as just stated, of course, Tesla had a very rough day, down 12%, 12.33%, or down $30 to 215.99 at the close. We have the Dow Jones down 504, the NASDAQ down 654, and we have the S&P down 128. I mean, it was a bloodbath, if I'm okay to use that word now. It seems to be some question about using the word bloodbath. Okay, so the Magnificent Seven, we had, just for fun, Apple down 6 and Google down 9 and Amazon down 5, Meta down 27, Microsoft down 16, Nvidia down 8. And then the Cathie Wood's all down as well. Now let's turn that into percentages, because there it becomes even more interesting. The Dow Jones is down 1.25%. It is now down 5% from its all-time high. We've got the NASDAQ down 3.64. As Jeff just pointed out, it's down like 7.5% from its recent high. We got the S&P down 2.31% in a single day. That's huge, and it's now down 5%. So again, my prognostication is we're going to go to 10. We will get a 10% sell-off. Will it go further than that? Well, that might depend on some of the things Jeff and I just talked about. What does the Fed do next week? What happens with jobs next week? What happens with this the gross GDP number tomorrow? What happens with the the unemployment numbers tomorrow and next Thursday? I mean, there's so many different things coming up that could very much impact. Now, one of the things that impacted today, people weren't paying a lot of attention to, new housing really down, sales of new housing really down, especially for summer, significant drop. Now, I've explained that a million times on the channel, but I wasn't expecting that big of a drop in the June numbers. Okay, so then we've got Tesla was down 12.33, so that's a big drop. But when you look at some of the rest, you've got Apple down 3%, Google down 5%, Amazon down 3%, Meta down 5.5%, Microsoft down 3.5%, and Nvidia down 6.8%. Okay, so even though Teslas were much bigger than any of those, the reality is Tesla is almost always, when it's down, it's going to be down more. But this is even more than that. So some of it definitely had to do with the miss. What percentage? Maybe 4% would be, just thinking in terms of what we've seen over the years, maybe 4% of this was all about yesterday, And the rest of it is just, that's where the market is. Now, which is the cause, and which is the chicken and which is the egg? People say, well, it was, Google's miss and Tesla's miss that caused the market to go down in the first place. That's an excuse. It just sets up people for a reason to sell off, to trim, and or people thinking that, okay, we might be needing to trim because this might become a 10% pullback. Yes, as Jeff said, it could go to 20. Right now, I don't have the sense that we're going to pull back by 20. What could happen that would change that? Again, a real problem in terms of the job numbers next Friday, that could do it. I don't have any, again, but I don't have that sense either. I'm not hearing noise. I'm not hearing scuttlebutt that the job numbers are going to be horrible. But if they go up another, from 4.1 to 4.2, that could be a pretty big turnoff to the markets. All right, let's go ahead and take a look at where bonds ended up. Whoops, wow, that's really weird. What did I just do? I am so sorry. Let's try that again. I hit something completely wrong, apparently. Oh, no, it's not me. It's CNBC. They want to advertise to me instead of just letting me jump in. That's never happened before. Get rid of that thing. So here we go. I'm so sorry. Wow, bonds unchanged in the pre-market. Oh, we're not there yet? No, we should be on the 10-year. Oh, can't even see the 10-year right now. Okay, so at the close, we were at 4.285, as Jeff pointed out. That is up significantly. The 2-year at 4.431, and that is under 15 basis points. Under 15 basis points. We are probably going to be flipping this baby in the next few days or possibly a week. So what happens when we flip it back the other direction? Well, we'll find out, won't we? Oil down 6 cents in the pre-market at 77.53 for Texas Intermediate. Brent is unchanged, still above $80 at 81.71. Now that has moved out back to a $4 spread. We have Netanyahu in New York. I don't think that's impacting it, but anyway, natural gas, in New York, in DC, natural gas up a little bit actually in the pre-market, 0.76% or $2.13. Gold backing off its all-time high, made some all-time highs today, back under 2,400 at 23.97. Silver down 0.94%, still under $30 at 29.04. Copper down 0.56%, looking like it might go back into the threes, $4.09, $4.08.6. The dollar down against everything, resurgent yen, it says here. Not sure, everybody's just anticipating, but sometimes anticipating the impact of the Japanese government interfering will cause a change. And then we've got the Bitcoin down 311, so settling back down into the mid-60s again, 65.4. And the pre-market, here we go with the equities going into tomorrow. So there is a reversal, which you would expect, some bargain hunting to start taking place. You've got the Dow down, up 92 or 0.23. You've got the S&P up 0.25 or 1350. And you've got the NASDAQ futures up 0.36%. Are 69.75. Do you want me to do that again? The Dow is up 92 or 0.23%. S&P up 1375 or 0.25. And the NASDAQ futures up 70 or 0.37. So not a big range here, 25 to 37% up for tomorrow. Ford shares tumbled 11% after their massive earnings miss. So you see Tesla being down 13, Ford is also down 11. So is there misery loves company or something like that? I think that's the saying from when I was a youth. Okay, so let's go back to Tesla one more time. I wanted to check the after hours. So what we've got on the after hours on Tesla is actually up 0.14%. So, if I back out, let's see, I need to change that and we can go take a look what that is. That's 30 cents. So Tesla up 30 cents now, joining the rest of the equities in a little bit of bargain hunting going into tomorrow. All right. So if you haven't done it already, hit the like, hit the subscribe, hit the notify, then join Patreon. That would be lovely of you. That then would conclude my remarks for this evening. We look forward to seeing you in the morning with the regular lineup. Cern should be on in the morning, along with after the bell, and then at night it would be Bradford Ferguson. So look forward to seeing you 3 more times tomorrow. Great talking to you.